It is Monday, August 4th, 2014. Current time is 10:30 GMT. Jay Meisler here with the Daily Forex Trading Outlook. We start August. August is always one of those months where it's thin, holidays all over the place, extended holidays, and we often see some erratic swings. But Mondays have been very quiet of late, not much follow through, and after Fridays, price action, a quiet Monday start is not really a surprise. Not much on the calendar today. Nothing really from the U.S. to speak of. So we'll watch stocks after the very weak showing at the end of last week. You can watch the bond market and the 10-year in the U.S. at 2.50% if you're looking for something that's a risk indicator. But for the most part, it looks like we're in for one of those Monday trading days. Now, if you look at the euro-dollar, one thing, it's been trading, its current pattern coming in today was at 134, is printed 3 days in a row. So far, we have not come close to it. It's not a pattern that's gone long enough to suggest a directional move, but along with other indicators, it looks like we've lost some momentum on the downside following the jobs report from the U.S. on last Friday. Now, if you look at, here's a daily chart, the broader channel is still intact, but if you go down, and if I draw a very steep trend line, which I don't like to do, but it's too easily to get broken, that has been broken. So we have lost some momentum in the euro, so consolidating. But one characteristic of this move from move down, we have not had much in the way of a correction, really since 140. Typically we get these really big spikes up that wipe out the shorts, and then we make a new low. It's been a very reluctant on the retracement side, and so that's why we've kind of ground down, let's say, as opposed to just having these big moves with momentum down. So that's where it is right now. If we look at some of the other charts, look at the 4-hour. So I get to it, and the 1-hour show very similar things. It's very obvious here. We have a double top here at 134.45. This is 134.83, and if you throw in 134.75, which was the breakout level, you got your support really between 134.45 and let's say 85 is the resistance. I'm sorry. And until that's taken out, or is taken out, 135 will not be in play. On the other side, you have 133.67 was last week's low, and that is the key level on the downside, along with, for me, 133.50 with the key target still 132.94. On this 4-hour chart, the momentum is still pointed down, with the 100 period moving average currently coming in around that 134.84 level. So that would be an indicator to look at. If you look at the 1-hour chart, momentum is clearly been broken, at least for now, on the downside, and this 100-hour moving average, which had capped the upside, is now a level you might want to look at as support, and that comes in around 134. It looks like 03 right now. So we'll see now whether this can be, whether the market can squeeze it all. But for the moment, it looks like we're consolidating. That, like I said, that 3-day pattern around 134 has been broken, but 134.45 is clearly the level on the downside. On the upside, I'm sorry. Probably see some stops of 134.50, but the market has changed only to the extent that, as I said, we're now at least consolidating between 134 figure to 50. So not much to go for today unless the market sniffs out stops at 134.45. Now, one word here, and I will strongly suggest this one. In this month's newsletter, I wrote an article, 12 strategies that I use to trade in a low volatility market. I updated an article, added some new wrinkles to it, and if we're going to be in at least in the month of August into one of these low volatility markets, I strongly suggest you click on it. The link is embedded right here. Just click on it. 12 strategies I use to trade a low volatility market. Otherwise, that's it for now. Have a a good start to August, and we will touch base again tomorrow. Good luck and good trading.